November 2015, question number 5A. November 2015, question number 5A. November 2015, question number 5, part A. November 2015, question number 5A. With reference to IPSAS 9, revenue from exchange transactions differentiate between exchange transactions and non-exchange transactions. So we have here exchange transactions and non-exchange transactions. Non-exchange transactions. So ladies and gentlemen, when you go, for example, ladies and gentlemen, when you go to income statement of the UN, income statement of the UN, pala malo umeandika revenue, you always see them saying that this revenue is from exchange transactions, and they subdivide their revenue into two: revenue from exchange transactions and revenue from non-exchange transactions. So, ladies and gentlemen, exchange transactions, of course, these are transactions where there is what here, somebody. You are selling a service. Yes, you are the UN, but you could be selling some service. You are selling a service, or you are selling, in this case here, some goods. For example, like the UN is very much known for selling what here, some publications. So when you sell like these publications, items that you have authored, when you sell them, ladies and gentlemen, and then you receive money, then automatically that revenue is an exchange transaction revenue because you have given out something, right? When it comes to non-exchange transactions, ladies and gentlemen, for non-exchange transactions, you are receiving revenue. You are receiving revenue without giving anything in return, without giving anything, without giving any service, any good in return. Very good example will be what here? The donations. Very good example there will be the donations. So tumeelewana ama hatujaelewana? Lazima tuongeleshane. Tumeelewana ama hatujaelewana? Lazima tuongeleshane. Tumeelewana ama hatujaelewana? Hapo sawa. Now, ladies and gentlemen, walituuliza tuwapatie examples of revenues from non-exchange transactions. Examples of revenues from non-exchange transactions. Examples of revenues from non-exchange transactions. Ladies and gentlemen, what have we said about exchange transactions? Here we have like the United, remember these are IPSAS, International Public Sector Accounting Standards. These are standards that are applicable for government institutions and of course, majorly the non-profit making organizations come at the UN, right? So, but fine, they are not supposed to be making profits. But when you look at their revenues, there are those revenues, for example, ladies and gentlemen, if you want to do an executive wedding, ladies and gentlemen, when you go to the UN here, they have very good grounds that you can hire from them. And then you'll be able to throw, in this case, ladies and gentlemen, a great wedding and of course, a very great area for reception. So you see, you are giving them money, not as a donation. They have sold to you some service. So then that becomes revenue from exchange transactions. And then now we have revenue from what here, somebody. Non-exchange transactions, they have given you, somebody comes like these member countries. They give you money without, ladies and gentlemen, you giving them anything in return, right? So then they're asking us to give them examples of revenues that you know of, which the government could be raising, ladies and gentlemen, from non-exchange transactions. Tuko na gani somebody? Umeona kama tax, wewe ukikatangwa pay, serikali kukata pay, wanakupeanga anything in return, which you can say, really, I've gotten in this case here, this service, this good, which is an exact value of what I gave them. Right? Ukienda kotini, ladies and gentlemen, for example, umechapwa fine, right? So I like that. Fines, donations, even debt forgiveness. The rich countries in archives inasema tumekusamea debt. You see, ideally you should have paid us that money, right? Because we gave you something, right? But tunakusamea tu. So in this case, it becomes a one-way transaction because there is no nothing much you've done, ladies and gentlemen. Okay, so that is very important. That's very important. Na imerudiwa mara mingi sana. Kama watuliza, analyze the difference between exchange transactions and unexchanged transactions. Right? Right? Hiyo amerudia zaidi. So I hope mmepata idea. Remember, it's just about what here? An idea. It's just about an idea. An idea. Now, ladies and gentlemen, look at May 2014, question number 5, boy. May 2014, question number 5, boy. May 2014, question number 5, boy. Are we there? May 2014, question number 5, boy. Tuko hapo ama tuko? Aki awazungumuzi. Uzuri, ini theory na kusomea haraka. Ini theory na kusomea haraka. Wanasema with reference to IPSAS 9, revenue from exchange transactions, summarize 5 conditions that must be satisfied before revenue from the sale of goods can be recognized. Can be recognized. Before you recognize a sale from the sale of goods, before you recognize your revenue from sale of goods, there are some conditions that must be met. Which conditions are these? And remember, IPSAS na IFRS hakunanga tofauti kubwa hivyo. Hata IFRS bado naongea kuhusu revenue recognition when it comes to recognition of what is the revenue from our sales, from goods you have sold. So what conditions should exist, ladies and gentlemen, for us to be able to do what here? Somebody to recognize revenue. Remember, most of the revenues we have are out of what here? Credit sales. So there are those conditions that must be met. Sijui ushapata swali kama hii mahali popote. Nirudie swali tena. Tunasema with reference to IPSAS 9, revenue from exchange transactions, summarize 5 conditions that must be satisfied before revenue from the sale of goods can be recognized. Paka nipate condition moja kutoka kwenu. Paka nipate condition moja. Ona kama Catherine amejua. If the seller, ladies and gentlemen, if the seller, turudi hapa kidogo. Turudi kidogo. Catherine anatuambia, the seller must not retain control of the good stroke service. Kama ameuza. Kama akona control, ladies and gentlemen, of the good, akona say over the good, then that is not a sale. You can't recognize. You can't recognize. Yes, Mary Njoroge anatuambia quantifiable amounts or revenue. What Mary is telling us, ladies and gentlemen, is that the amount of revenue must be measured reliably. The amount of revenue must be measured what here? Reliably. If you can't really be able to measure the revenue amount, you see your sale umemake. You see your sale umemake. At umeuza goods, unaambiwa if this and this happens, we shall be able to give you this much. No. It has to be, ladies and gentlemen, about proper quantification, because it's a figure that I'll be able to put in my financial statements in the current period. How comes nobody's talking about economic benefits? Economic benefits. Ladies and gentlemen, when we sell, we expect some economic benefits to flow to our entity. So it is probable that economic benefits will flow to the entity. Yes. And then, of course, we have the cost associated can be identified and measured reliably. The cost associated can be identified and measured what here? Reliably. So for us to be able to book a sale, ladies and gentlemen, we must also have transferred to the purchaser significant risks and rewards of the of ownership. So kama ni gari tumeuza, transfer risks and rewards of that motor vehicle to the purchaser. Lakini kama bado unalipa insurance company na unasema tu ni seller, what did you sell? And still risks are on you. So the concept of risk transfer, risk and rewards transfer to the purchaser. The concept of economic benefits, ladies and gentlemen, being able to flow to us. The concept of ability to measure revenues reliably, ability to measure the cost associated reliably. Very, very important for you to remember that. Ladies and gentlemen, part A of that question, it speaks about IPSAS number 4. IPSAS number 4. IPSAS number 4. IPSAS number 4. In the context of IPSAS 4, effects of changes in foreign exchange rates explain how exchange differences arising on monetary items are recognized. Imesoma na Mr. Njuguna sana hii. Hata nimefanya practical because I know Mr. Njuguna taught me. Mr. Njuguna taught me. Mr. Njuguna taught me, and if there is anybody who has patience of repeating is Mr. Njuguna. Wewe Makena, hebu soma swali vizuri tuambie na maanisha aje. In the context of IPSAS 4, explain how exchange differences arising on monetary items are recognized. Sio vibaya kuuliza. Mlikuwa mmepitia maneno kule mamuko mmepitia kabisa ndio nijue scope. I'm doing scoping now. Mlikuwa mmepitia mamuko mmepitia. Mlikuwa mmepitia ama mko mmepitia. Hii maneno kidogo namna hii. Mlikuwa mmepitia ama mko mmepitia. Kwa jibu tu, mimi ni baba yenu. Baba yenu mnamwambia ukweli. Like me bado nasikia wengine walikuwa wamepitia ama wako wamepitia bado. Niko nje kabisa. Nope. Okay, no problem. Ladies and gentlemen, remember when we talk over IPSAS number 4, whenever we are, for example, translating like financial statements of a subsidiary. Of course, you guys must have handled the monetary items. Monetary items, ladies and gentlemen, like the short term. Sema for example, kama uko na kitu kama gani, let me give you a very good example ambao utasahau. A monetary item. In short, these monetary items, for example, you want to exchange them. When you want to exchange them, maybe you have got hard currency, you want to exchange them. It's either you will make a profit or a loss on exchange. Either you'll make a surplus, or in this case, ladies and gentlemen, a loss on exchange. Regardless of what you make out of monetary, you can never defer them. The surplus stroke deficit that you make out of the monetary exchange rates, ladies and gentlemen, you will have to record that in the period that they arise. You record that in the income statement in the period that they arise. You book them in. Unaweza kungoja ati mwisho wa mwaka. You check what was the flow, right? Is it a profit? I do something. I record it when it arises. I record this when it arises. Very good. Now, the other thing that I would want you guys to be good at, is this concept of related party disclosures, both for profit-making entities and non-profit-making entities. So as I look for a proper question, ladies and gentlemen, I would want you great students of mine to tell me, what do you understand by this terminology, related party disclosure? What is a related party disclosure? What is a related party disclosure? What is a related party disclosure? Somebody talk to me. What is a related party disclosure? What is a related party disclosure? What is a related party disclosure? Common interest? No, I'll not be able to give you a mark there. I want to be able to give you a mark there. Like a subsidiary is giving me an example. Associates, of course, they're also what here? Related parties, joint ventures. Associates, yes, I agree, yes. Transactions between group members, those are related parties, yes. So group members. Transactions within the group, I agree. How about, for example, key shareholders? Key shareholders, including their family members, including family members. Key management staff, including their family members. All those are related parties. All those are related parties. And if you are not careful, then these people will not do business at arm's length. These people will get close to each other, hugging themselves. And then at the end of the day, they con the company. They con the company. They steal from the company. They steal from the company. So remember, with the related party transactions, ladies and gentlemen, you are required, number one, to identify the related parties in an entity. And then you are required to go and enter them in what we call a conflicts of interest register. And then most importantly is the disclosure of the business that took place between the related parties. Disclosure of the businesses that took place between it. So there must be adequate disclosure. If there is no adequate disclosure, then straight away, ladies and gentlemen, know that there is a problem there. There is a problem there. Okay, so I'm trying to look for a good question on related party. That's an area mimi najua wanaweza wakakurushia haraka sana. Okay. Na naona hiyo theory question ya past paper mahali wewe ya related party. Nani anaona hiyo? Ama kabla nipate ya related party, because I've already explained. Branis anasema May 2019 question 1D. Before hiyo, hebu tuangalie ya May 2014 question number 5C, hii mambo ya integrated reporting. May 2014 question number 5C, mambo na integrated reporting. Mambo na integrated reporting. May 2014 question number 5C. May 2014 question number 5C, are we there? Tumeipata kweli? In the context of integrated reporting, discuss any two components of an integrated report. Discuss any two components of an integrated report. Hii kitu inakuwa kila mahali. SG iko wapi? Hata auditing and assurance iko. Integrated report. So could you kindly give me two components of an integrated report? So wamesema mzuri zaidi, ladies and gentlemen, that Mary anasema, I can never forget the qualitative aspect. I can never forget the sustainability report has to be part of this. And then, of course, number 2, we have the financial what here? The financial statements have to be there. The financial statements have to be there. The financial statements have to be there. And then most importantly, the biggest component is what we call the governance report. So it is under the governance report that we'll get now all those things you're telling me, the risks, etc, 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 etc. So remember, when we talk of, ladies and gentlemen, sustainability report, we are looking at the 3 Ps. The 3 Ps. Or rather, generally, not 3 Ps, but here now we are looking at the people and the planet. The people and the planet. This is the profit. The profit and, of course, the assets, etc, 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 etc. So is this model sustainable? The business can only be sustainable if you're looking at your people nicely, if you're looking at the environment nicely, like that. Great. Then they asked us something very nice there. Number 2, explain 4 guiding principles that underpin the preparation of an integrated report. Explain 4 guiding principles that underpin the preparation of an integrated report. Which principles would have you written, ladies and gentlemen? That when you're drawing an integrated report as an auditor, what are the key things you must go out of your way, right? Right? Unavile Robert anatuambia future orientation, right? And that is why, ladies and gentlemen, you always get like the chairman saying, this is how our future is. They normally call it a future outlook. Future orientation is key, Ladies and gentlemen, in a sustainability report, yes, I'll have to consider the going concern. I'll have to consider the going concern. Year two. Strategic plan basically has got, of course, you're going to put it as a separate point, but remember, this has got what here? This has got every relationship with the future outlook. So I can see Bwana Hillary raising up his hand. So I don't know whether you would want me to unmute you and then you speak to us. Tumpe dakika moja. Hillary, the floor is yours. Bwana Hillary, talk to us. Just unmute yourself. And then you talk to us. The thing about mmesahau ni kama Hillary amaza amepotea.
Communication.
Not really. Remember, ladies and gentlemen, when we talk of what is an integrated report? Integrated, putting together. We are putting together both quantitative and the qualitative aspects of the organization. And at the end of the day, when we talk of integrated reports, ladies and gentlemen, remember the people who came up with this, they said at the end of the day, this kind of a scenario where we were doing just the annual reports, we're only reporting on the context of one stakeholder. Who was who? Who was the shareholder? The profit. For any organization, ladies and gentlemen, to really function, there are so many stakeholders who have to be there. So Kasema, at the end of the day, and the integrated reporting, ladies and gentlemen, we must have what we call stakeholder inclusivity. This is a separate point. Stakeholder inclusivity. Right? So that is a key consideration. Ladies and gentlemen, then of course the other consideration will be the governance. governance has to be factored in. What is the structure? I have to look at this. Otherwise, if I don't look at governance and there is a whole chapter of governance in the integrated report, then I'll be having an issue. I'll be having an issue there. That one is okay. At least mlikuwa na idea. Amukwa mbaya sana. The same was repeated, ladies and gentlemen, in November 2015. November 2015, question number 2A. November 2015, question number 2A. November 2015, question number 2. Tuko na hiyo question number 2 na. Because I would want us to get a few minutes. Nikufanyie consolidation kidogo tu. Hii consolidation afire mmeiva. Consolidation, is anybody who has a problem na consolidation kweli? Ati mtu sasa ajui kutafuta goodwill. Is anybody who has a problem? Sure, Haron. Margaret, hapana. Hapana aki hapana. Lakini nitajua cha nitafanya. So it's page number 131. Wamesema tusome. Integrated reporting IR is aimed at promoting a more cohesive and efficient approach to corporate governance. It serves to improve the quality of information available to providers of financial capital to enable a more efficient and productive allocation of capital. With reference to the above statement, highlight 6 content elements that an integrated report should contain. Nitaanza straight away na governance. Number 1. This is nikasahau. Governance has to be there. 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 Financial performance. Financial performance. I like that. Financial performance. In integrated reports, you must give us all those financial statements, income statement, statement of financial position, cash flows, whatever. You must give us those things, yes. You must give us those things, yes. Ladies and gentlemen, remember, if it is an integrated report, you must give us a SWOT of the company. A SWOT of the company. SWOT. Specifically, the opportunities and what are threats, the risks, basically. You must have a whole chapter talking about what are our risks, the threats. Because remember, integrated reports is all about what is sustainability. And for you to be able to sustain yourself, then you need to know that these are the arrows which are coming to kill me. How do I put a stop to them? So there must be a whole chapter on what here, on risk. I like that. Then, of course, we have the future outlook. Future outlook is very, very important. Very, very important. Very important. I can see you guys are mentioning something to do with management commentaries, or director's reports. Those normally come under those opportunities. Outlook, the chairman will speak quite a lot about the outlook, etc. Ladies and gentlemen, then remember, most importantly, the business model. Nowadays, you must disclose your business model. How are we making money? How are we making money? How are we making money out of this? Or we are thieves. So business model is quite important. And of course, at the very beginning, we must also always present what we call an organizational overview. An organizational overview. Yeah, Cindy says future outlook. We must also have an organizational overview. We must have, in this case here, the macroeconomic, what we call external environment. External environment, into bracket pastel. You can speak about so many things. And the pastel is where you bring in the issue of what here. Yeah. Nicholas talks about prospective financial information. Perhaps he has an idea that that thing could come tomorrow, right? Prospective financial information. Aya, wakatuuliza just the other sitting. Wanafunzi wanagokanga ya faru kwa nini sasa? Max mingi sana. Wakatuuliza, Explain 3 benefits of integrated reporting to both an organization and the users of financial statements. Explain 3 benefits of integrated reporting to both an organization, and the users of financial statements. So what are the key benefits? What are the key benefits, ladies and gentlemen, of this IR? One thing I'll never forget, long-termism. Long-termism. It makes directors especially to look at more than 1 year, to look at beyond a year. We don't look at just the profits, no, because we're looking at sustainability. So you're looking at the future. So we must train our employees. So long-termism is very, very important. I'll give Mary, because Mary, I shall do a concept here, stakeholder management, right? Elimination of what here? Expectations gap. Because integrated reporting, ladies and gentlemen, is basically a stakeholders issue, putting stakeholders together. So it eliminates that expectation where shareholders here are thinking that these people should be making profits which are up there at the sky, and yet these people can't even deliver. They're delivering hell, right? So at least they have to come together. So it helps us get, like what the other lady told us, getting stakeholders on board. So elimination of the expectations gap. Please give me the points. Please give me the points before I give you the gist of this class. This class, really, I've got so many things to give you. I've got so many things to give you in this class. I've got so many things to give you in this class. So many things to give you in this class. Ladies and gentlemen, don't forget that it is a balanced scorecard. It is integrated reports that normally give us a very serious connection between what and what, between financial and non-financial metrics. So connectivity between financial and non-financial metrics. So that we are able to see that if we train our workers this way, what impact will we be having on our profits? So that connection, ladies and gentlemen, will always make managers to understand better the organization, So ladies and gentlemen, I would want to beg for 15 minutes I eat something. Nimeongea tangu saa 11 nikakumbuka sijachukua break, which is very unhealthy. Lakini sasa kuna one problem. Nikienda najua mtanipea ruhusa nikule. Kukula nayo mwezi kataza mtu kukula. Nikienda kukula, ladies and gentlemen, kuna one problem. Hey. Let's continue. Tuendelee sasa pole. AFR ni mzito sana. Change tu kwanza nimeambiwa. Huyu ni amejua. Oh yeah. So May 2017 question number 4, Emmanuel says he can't hear. Are you able to hear me really? Are you able to hear me? Yes. So Mundi, network problem. The management commentary, management discussion analysis, MDA, provides users with integrated information that provides a context for the related financial statements. Discuss 3 contents of management commentary in the entity's financial, the same. Ladies and gentlemen, you must give us, yes. Okay. Now you have to, you must be hearing me much better now, right? Much better. Yes, good now. Thank you very much. Thank you for raising that. So I repeat again very fast. The management commentary, management discussion analysis provides users with integrated information that provides a context for related financial statements. Discuss 3 contents of management commentary ni kama hiyo integrated reporting. Ladies and gentlemen, the first thing the management, of course, they have to give us there will be the nature of the business, the overview of the business. That's very, very important, right? Number 2, of course, they must give us like the management or the business model. And the business model, they must give us the objectives, the strategies, etc. We have the concept of, yes, current performance and forecasts, right? That is results and what here? Prospects. Results and prospects. We have risks, the key risks, right? And then, of course, we have the KPIs. KPIs lazima ziwe kwa management commentary. Kwa management commentary. Kama sasa walituuliza ilikuwa kitambo June 2011. June 2011 anatuuliza, in relation to a reporting entity annual accounts, analyze the differences between management discussions and analysis and the footnotes. Footnotes to the accounts. What is the major difference between those footnotes pale and the management commentary? Na anaweza tuambia haraka haraka that difference. Just one liner. Kuna footnotes na kuna management commentary. Management discussions and analysis. What is the difference before tuende katika consolidation? Before tuende katika consolidation, what is the difference there? Melvin anauliza which page? Tani nimeshatoka hapo mbio. Pole. Footnotes are a summary of what could not have been included on the MDA. No. Ladies and gentlemen, remember that footnotes basically are explanations, for instance, of the figures that we have in the financial statements. Mostly, like, for example, like the principles we use, right? Like the policy or of depreciation, right? Footnotes, right? But when we talk of management discussions and analysis, ladies and gentlemen, of course, even them, the directors, will also talk about the figures mostly. But now here we are talking of the bigger picture, both quantitative and what here? Qualitative, right? The overview, the risks. Like now in the footnotes, you'll not have those risks there, right? You cannot have strategies under footnotes. No. Those will come under management what you discussions like that. Right? Very good. Now, ladies and gentlemen, the last one before I disappear, there is this one here which wants you to describe what a government business enterprise is. What a government business enterprise is. What a government business enterprise is. Saidia mwalimu, what is a GBE, government business enterprise? Entities with the mandate to trade, you know, like Safaricom has the mandate to trade, really. Good try, but there is something you're missing out here, Robert Onunga. There's something you're missing out here. But I like the example bit of it because it can really talk volumes. It can talk volumes. Very good. Jairus tells us these are entities owned by who? By government. They are entities owned by government. But now remember, like what our gentleman told us up there, they're owned by government, but in this case here, they have a mandate to do business. To do business. Like what Absalom tells us here, owned by government, but they are what are profit-making entities to transact with the aim. No, to transact with an aim of making a profit. Where? With the aim of making a profit. They can provide goods or services to citizens at a profit. At a profit, yes. So the gentlemen, listen to me very well. Listen to me very well. When we talk of government business enterprises, these are basically profit-making institutions that are owned by government. They are not supposed to get funding from the exchequer. They are not supposed to get funding from the exchequer other than the initial capital. Other than the initial capital. If you are a serious student, ladies and gentlemen, whenever this examiner asks you about government business enterprises or entities, always mention KASNEB. Mention KASNEB as a very good word here example. They don't rely on government, but KASNEB can never go back for money from government. They will be told, no, we had put in our capital. So you go out there and look for money like that. Right? Of course, they are never very greedy. That's why even KASNEB, KASNEB is very cheap. Yeah. Compare KASNEB to other examining bodies like CIFA, not CIFA, but CFA US, ACCA. Right? Kufilisha watu wanatukula tu hapana. By the way, KASNEB ukiona umeanguka ni wewe uko na shida, Hillary. Ni wewe uko na shida, sio KASNEB. Ni wewe uko na shida. So what are the major characteristics of these government business entities? Major characteristics. What are the major characteristics of government business enterprises? Major characteristics of government business enterprises ni gani? Ni gani? Ni gani? Major characteristics of these companies. Ya kwanza ni power to contract in its own name. Power to contract in its own name. Kama ni magari wana own na jina yao. Has been assigned the financial and operational authority. Financial and operational authority to carry on business. Has been assigned the financial and operational authority to carry on business. It sells goods and services. Sells goods and services. At a profit. Sells goods and services at a profit. They are not reliant on continuing government. They are not reliant on continuing government funding. Not reliant on continuing government funding. They are controlled by public sector entities. They are controlled by public sector entities. In this particular case, the treasury. Mostly treasury, like that. Now, ladies and gentlemen, there is this last area ambayo hautamiss. Hii mambo ya steps followed, right, in setting of IFRS. The steps which you have to go through if you want to make a new IFRS. if you want to make a new IFRS, what are the basic steps that you've got to go through? Yes, IFRS. So we have McKenna talking about ideation. The idea has to be there. Want to do, right? So who is issuing this paper? Charles, thank you very much. Who is issuing the paper, Mary? Who is issuing the paper? Haya, endelea. Endelea. Then discussion letter, public participation. There is participation somewhere. Sasa ndio nimeona huyu anamaanisha namna gani. Kitu ako nayo amekuja na what we call a mnemonic. Unaona hii idea. Anasema there must be a concept paper. So issue a paper. Issue paper, yeah, concept paper. Right? Discussion. Perhaps at discussion, ladies and gentlemen, is where we have that participation etc. Then you have got this exposure draft, which has to be on ISB website for some time for criticism. And then, of course, later on, we shall be having what you approve. I like this to some extent. Wacha tuone kidogo. Approval to be enlisted. Exposure draft. Consultations here with these other bodies of accounting. Great. So at least hiyo ni kitu unaweza Google ama ukafanya whatever, uko na idea. Hii maana hapa ni wewe ukuwe na idea, ndio tafadhali uniwache dakika 2 niweze kufanya kitu ambayo inaitwa consolidation. Na consolidation tafadhali, hata usiende kusoma vitu mingi sana ya consolidation, mnaenda hapana. Enda tu just a normal question ya consolidation ambayo iko na income statement na gani somebody income statement na statement of financial position. Sasa una time kama uko umejua vitu vingine yote, sasa una time. Sasa wewe angalia tu income statement and what year statement of what year ba financial position. Yeah. Robert amesema mwalimu, mimi nakufa na statement of financial position. No, to diversify your risk, wewe fanya zote mbili. To diversify your risk, fanya zote mbili. Aya. So mtanipatia dakika 1 tu ni download kitu hapa. Nicholas anasema cash flow na cash flow. Mtanipatia dakika 1 tu ni kuonyesha maneno hapa. Only 1 minute. Only 1 minute. Ukuje kunithank kesho ukisema mwalimu ulitusaidia sana. Aya, please let me know when you get to see my board. Not board, but my screen. Are you able to see my screen? Thank you very much. So I would want us, mostly your examiner lifts questions from ACCA. So I would want us to do a question here called pedantic. A question, nice question. Nice question called who? Pedantic. Pedantic. Do you happen? Yeah. Very nice question. Very nice question. Very nice question. Very nice question. Yes, ladies and gentlemen, let me see your comments first of all. Yes. Wanataka teacher afanye zote sahi. Now, wanasema on 1st April 2018, Pedantic acquired 60% of the equity share capital of Sophistic in a share exchange of 2 shares in Pedantic for 3 shares in Sophistic. The issue of shares has not yet been recorded by Pedantic. At the date of acquisition, shares in Pedantic had a market value of $6. Below are the summarized draft financial statements of both companies. Statements of P&L, Pedantic, Sophistic. Statement of financial position, Pedantic, Sophistic. The following information is relevant. At the date of acquisition, the fair values of Sophistic assets were equal to their carrying amounts, with the exception of an item of plant, which had a fair value of $2 million in excess of its carrying amount. It had a remaining life of 5 years at the date straight line. Sophistic has not adjusted the carrying amount of its plant as a result of the fair value exercise. Sales from Sophistic to Pedantic in the post-acquisition period were $8 million. Sophistic made a markup on cost of 40% of these sales. Pedantic had sold like that. Other than where indicated in noise, Sophistic trade receivables were due from Pedantic, which did not agree with Pedantic corresponding. Pedantic policy, NCI wameniambia, the fair value of NCI in Sophistic at the date of acquisition was estimated to be $5.9 million. Consolidated goodwill was not impaired. I like that. So they want us to give them the prepare the consolidated statement of P&L for Pedantic for the year ending like that. Prepare consolidated statement of financial position for Pedantic like that. Statement of change in equity is not required. Right? Great. So ladies and gentlemen, let's just handle this question in 10 minutes. 10 minutes, mtakuwa mmetoka nyote hapa, hata mimi najua mmechoka. So jambo la kwanza, any question ya consolidation, usikaianza na workings. Unasema nini yangu iliisha kitambo battery So swali ya consolidation yoyote, usikaianza na workings. Hizo workings hata mingi hazatumark. Right? So the only thing unafaa ujue ni group structure. Group structure, group structure. Group structure. So like now here, ladies and gentlemen, so then, gentlemen, the key thing you're supposed to understand is the group structure, and then you look at the date of the financial statements. So the group structure, we are told the Pedantic acquired what? 60% of Sophistic. So then in my group structure, Sophistic will be who? 60% is quite significant. 60% is quite significant. So Sophistic becomes who, ladies and gentlemen? Sophistic becomes who, ladies and gentlemen? Is our subsidiary. Is our subsidiary. Is our subsidiary. Lakini mara mingi pia examiner wa Sec 6 amechezea wanafunzi wengi sana. Akatumia hiyo concept ya IFRS what year 10. Akatumia concept ya IFRS 10 where unakuta umepatiwa katika IFRS 10 unakuta examiner amekuja uoye akakwambia A has got what year somebody 40% of B. Lakini anakuambia A fine 40% below 50%, but A through some agreements is able to appoint say 4 out of 5 directors. in company B. Ladies and gentlemen, look at that representation at the board. Remember, out here control is measured in terms of what are you able to do in terms of influencing the policies, right, of the company, in terms of running the company. If you have got a bigger board representation through whatever agreements, ladies and gentlemen, like that, the quantitative numbers notwithstanding, then automatically we've got control of a B, then automatically B will be called what here? A subsidiary. Remember, under IFRS 10, control is not about just numbers. It's about what here? The qualitative. What else are you? Somebody will be even having 20%. But for example, if you're given the right to appoint a chairman to the board, and on top of the chairman, blah, 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 then straight away know that you have in control. So like now here, what they have done, they have told us, ladies and gentlemen, that we have a company called the Pedantic here. A company called Pedantic, which has acquired 60% of Sophistic. There is no information telling us that this company Pedantic, despite having a bigger percentage, that they have given away their right to control Sophistic. No information. So straight away, I'll come and tell this examiner that this is more than 50%, meaning that Sophistic is our subsidiary, and this one here is what here somebody is the parent company. And if that is the case, then there is, if the parent has 60% of Sophistic, then straight away there must be an NCI. NCI will be what here somebody will be 40%. NCI will be 40%. Because the two must add up to 100. Now, if that is the case, ladies and gentlemen, then I'll be interested in two things. I'll be interested in the date of acquisition, and the DOF. I'll be interested in the DOA and the DOF. So the date of acquisition, what have they told us here? On 1st April 2018. So 1st April 2018, in 20 minutes, you will be able to see what I'll be able to do in 20 minutes. And that is what I want you to go and do exactly. Usianze kumaliza swali ya group consolidation. Ukimaliza swali ya group consolidation kwa exam, utaanguka exam. Sababu gani? Utachukua 1.5 hours. So kuna vitu ambavyo hufai ufanya katika consolidation at all. Because hapa ni about ujanja ya kusurvive. You'd want to get like 8 out of 12 without really doing so much. Using the Pareto, where you're putting in efforts 20%, but results 80%. So DOA is date of acquisition. DOF is date of financial statements. So they have told us here the DOA date of acquisition is 1st of April 08. And then the date of financial statements, look at the financial statements given. The financial statements given, ladies and gentlemen, the ones that I'm able to see, they are dated 30th September 08. 30th September 08. So 30th September 08. So could somebody in this case who is good in counting months count for us? So we have the whole of April because it's the beginning of April. So we have April, May, June, July, August, and then the whole of September. So how many months? 6 months. 6 months. So the subsidiary was ours for how many months? Only 6 months in the year. And then now once I do that, I've been able to compare the DOA and the DOF, and I've been able to know the number of months. In this case, ladies and gentlemen, the company was our subsidiary in the year. Then straight away, I look for the income statement. So nakuja namwandikia title, Nicky Smile. Kumbuka financial reporting haitaki mwanafunzi yako na hasira. Wewe ukiwa ni mwanafunzi, kumbuka nawaambia kila siku, ukitaka kupita AFR, lazima ukuwe na face kama hiyo. Unaona hiyo? Once unakuja na AFR, tunaanza kuwa na face inakaa hivi. Wewe huwezi ukapita financial reporting, hawezi. Haitaki hasira. So unakuja hapa kwa furaha, ukismile kwa exam peke yako namna hii, unaandika namna hii, ladies and gentlemen, unaandika pedantic group, consolidated income statement, Franco nitakusumbua kalamu inakataa. Consolidated income statement. So then next year, of course, unajua dates, nyinyi watu machomo, unajua dates, utaandika dates. So unaanza na sales. Usianza na working at all. Mimi najua niko na marking scheme sana za KASNEB mingi, nitakwambia usianza na marking nini at all. So unaona revenue kama pedantic ni 85,000. So unasema 85,000 ya parent plus hii ingine ni 42,000 ya Sophistic. But now remember that Sophistic was only yours for how many months? Sophistic was only yours for 6 months. So times 6/12. Sophistic wasn't to us for more than a year. So we have to prorate this. Kumbuka, anything less than 12 months lazima ufanye pro rata. Lakini ikiwa 3 years, 4 years hakuna prorate. Kumbuka niliambia siku moja hata leo nimeambiwa 2 years. Sasa akasema ati hapa 24/12. Ananiambia ati maliza exam, ananiambia mwalimu utapita. So unajua wanafunzi wengine tunashindwa kuambia ukweli kwamba umenyoroshwa. Sababu utamharibia mood za Christmas festivities. So the best ni kuambia yenyewe umengangana. Exam ikikuja, because we only prorate when this thing is less than what year? 12 months. Like now here, 6 months like that. Right? Usichukue calculator kando kabisa, mbali kabisa. Unda kwa next, the cost of sales. So cost of sales, what do we have, ladies and gentlemen, for cost of sales? So for cost of sales, this is what I have here. For cost of sales, this is what I have. I have 63 and 32. 63 and 32. Cost of sales, I have 63,000 and 32,000. But now remember, this is for a subsidiary like that. Nawacha nafasi kidogo ya gross profit. Alafu nataka mnisikize. Kumbuka, kama ungekuwa na kampuni ya tatu, hapa. Ungekuwa na kampuni ya tatu hapa. Kampuni ya tatu, maybe inaitwa CIFA ama whichever. Na umeambiwa CIFA ni associate. We don't do consolidation line by line between parent and what year associates. Ila associate, ungekuwa na kitu inaitwa CIFA hapa, mimi leo nafanya CIFA maybe ya tatu, uko na pedantic, sophistic na CIFA. Hii CIFA kama ni associate na RAB yote. Because normally line by line ni gani? Ni parent with the subsidiaries. Subsidiary. And subsidiary lazima nifanye proration kama ni income statement. So naacha space ya gross profit, alafu nakuja nachukua the next thing. The next thing, ladies and gentlemen, umeniambia hapa ni gani woye? Mnipatia dakika ngapi by the way? Hata mjaniambia, it's important niombe ruhusa. Mnipatia dakika ngapi? Mnipatia dakika ngapi woye? Mnipatia dakika ngapi? 30. Thank you very much. Not hapana. Exam lazima mlale. We. Hadi che Gladys, we. Turakesha hapana paka mlale. 30 is okay. Not morning, no. 30 is okay. Hata mimi nikianza kufunza more than your time itakuwa too much. 30 is okay. Haya, so nakuja hapa kwa cost of sales. So kwa cost of sales, this is what we have. Wamesema not cost, distribute after gross profit, I can see distribution cost. So unaandika hapa distribution cost. Unachukua, nimeona parent iko na 2,000, hii nyingine pia ni 2,000. Parent in 2,000, hii nyingine lazima ufanye proration like that. The next one ni administrative expenses. So admin expenses, ladies and gentlemen, admin expenses, I have 6,000. I have 6,000 plus 6,000 plus 3,200 plus 3,200 times 6/12. You need admin expense. Next, kuna finance cost. So finance cost, ladies and gentlemen, finance cost, I can see, I hope I'm not seeing my own things. I can see 300 plus 400 plus 400 times 6/12 times 6/12 times 6/12. So from there, ladies and gentlemen, of course, I'll have what we call the profit before tax. So I'll have to leave some space for profit before tax. And then, ladies and gentlemen, we have here income tax expense. So income tax expense, wacha niwachilie kwanza board, muangalie board. Income tax expense, wamenipatia 4,700 na 1,400. Income tax expense, wamenipatia 4,700 na 1,400. Naenda sema times 6/12 like that. And then of course I'll be able to get profit after what? After tax. Haya, sasa nataka unisikize. Ukishafika income statement hapo, usichukue calculator ama uanze kufanya working. Hii waachana nayo, enda andika tena another page. Watch a space tu. Another page uandike pedantic group statement of financial position. Again ukopy. Nona. Alafu zuri wakati tunafanya statement of financial position, kwa statement of financial we don't prorate the figures Hiyo unachukua kama ni assets, unachukua assets za parent plus assets za subsidiary. Mzima namna hiyo. So mimi sina space ya kutosha, so inabidi nifanye ikiwa peke yake. Ingawa mimi napenda file zote mbili because kuna entry ambayo inaingia kwa hii na pia inaingia kwa ile nyingine. Haya, sasa nisikize. Kitu ya kwanza, mimi ni mwanafunzi mjanja sana. Kitu ya kwanza natafuta, ndajiuliza hii kampuni ziliuzania. Mwanafunzi mjanja anapitanga kitu bila kujua. Hii kitu sipeta kiwerevu sana. Unauliza hizi kampuni mbili ziliuzania chochote? Yes, ukiangalia, look at note 2. So what was the intra-sale? Sales from sophistic to pedantic in the post-acquisition period were 8 million. Oh yeah. Hata bila kuendelea kusoma, nimesha realize kwamba there was an internal sale. That internal sale, ladies and gentlemen, is fake. Any internal sale should be subtracted from the group sales and from the cost of sales. So unakuja hapa uoye unasema minus 8,000. Mimi naona wanafunzi wakisoma consolidation sana wachekelea. Unasoma nini hapa? Hata ukiambiwa tu baadaye atijui partial disposal. So long as it's control to control. When I lose control, ndajiuliza ni lose control wakati gani? So from there ni kufanya prore. Hii ni kitu ya macho tu, hakuna kitu hapa. So nimeweka 1,000, nakumbuka hii figure zote ziko in thousands. So baada ya kusema 8 million, mimi nimesema 8,000. Kwanza tuanze hapa kabla ni explain Robert. Are you able to see why I'm using 8,000 and not 8 million? Are you able to see why nimetumia 8,000? Are you able to see why nimetumia 8,000? Because my figures, let me explain this. Because my figures up here, they're in thousands. So the figures are in thousands. Nikisoma hata hizi hapa, lazima nasoma zikiwa in terms of what here? Thousands. So sales from sophistic to pedantic in the post-acquisition period were 8,000. So ladies and gentlemen, kama sasa mimi hata Bible inasema namna hiyo. Mimi na bibi yangu ni kitu moja. Remember, you're looking at the parent and subsidiary as one economic entity. That is what IFRS says. Parent and subsidiary. Not parent and associate. Parent and subsidiary, the one economic entity. So if they have sold these components of the economic entity, they have sold goods to each other, that is fake. It's just like transferring goods from this store to the second store of the same organization. Just like, ladies and gentlemen, if I have my madam coming to my shop, if I'm selling clothes, apende nguo, achukue nguo yake, hata achukue na watoto. Unataka kusema utamwambia rehembesha? Hapana, that is so close. That is so close. So any internal sale, where crumbs here, kuna mambo ya explain zaidi. Where jua internal sale must be subtracted from sales and from where? Cost of sales. Now what tuna subtract from cost of sales kwa sababu gani? Because in cost of sales, we have opening stock plus purchases minus closing stock. So one of the companies is saying, I sold goods worth 8,000 to B. And the B on the other side is saying, I purchased. But you see now purchased is in cost of sales. In cost of sales. Right? So, ladies and gentlemen, remember, what have we said about intra-sales? If I were you, Jaira, somewhere, I would have written a statement there about intra-sales, that intra-sales must be cancelled from the group sales and the group cost of sales in my mother tongue, Kikamba. Now, ladies and gentlemen, again, now remember, you know, these things are very, very procedural. You follow them that way. If there is an internal sale, kuna profit ambayo ile kampuni iliuza, kuna profit ambayo ili claim, imemake from a sister company. Kama a sister company ingekuwa imeuza everything from that company as well, whatever it received, if it had sold everything to outsiders, to third parties, then the entire profit will be realized. But in most cases, if we sell these goods here, which are worth 8,000 to Sophistic or whoever, chances are, by the close of the year, hawatakuwa wamemaliza kuuza hizo goods zote. Kwa hivyo kuna what we call, ladies and gentlemen, there is what we call UPS. There is what we call UPS. UPS in this case here stands for what here? Somebody. Unrealized profits on stock. So we have what we call UPS. So UPS is unrealized profit on what here? On stock. How do I get UPS? We normally take the profit margin always. Profit margin times the remaining intra-sales times the remaining intra-sales. So anytime we want to get UPS, anytime, ladies and gentlemen, you want to get UPS, always UPS, we take the profit margin times remaining intra-sales, times remaining intra-sales. So have they given us, first of all, in this question, have they given us, ladies and gentlemen, have they given us the profit margin? Wamesema Sophistic made a markup on cost of 40%. Ladies and gentlemen, markup is an enemy of consolidation. Whenever you see markup, there is a free mark for you. Whenever you see markup, always calculate margin. So come and calculate. So wametuambia markup is 40 over 100. Ladies and gentlemen, mimi najua ukinipatia markup, mimi najua margin iko na base kubwa. Unakram hivyo, margin iko na base kubwa. Kumaanisha margin itakuwa 40 over 100 plus 40. Yani margin, una imagine tu, margin iko na bigger denominator. So then what I'll do, I'll take the denominator of the markup plus the numerator. Hii hapa. Unaona hii? Kama numerator. So nimechukua chini hapa. Nimechukua 100 plus. So inakuwa ni 40 over what here somebody? 40 over 140. So what have we said, ladies and gentlemen? What we have said, which is very important, is that markup, whenever you see markup, ladies and gentlemen, in group consolidation, that is an enemy of progress. We have to look for margin. So I don't know whether there is somebody who has somehow known how to, at times you also ask for grace of God. Is there anybody who has somehow known how to calculate the profit margin? Profit margin. Margin. Is there anybody who has known how to, grace of God. Grace of God. At times the grace of God. It's only one student amejua calculate. Wengine je woye. Nataka niwasaidie. Thank you very much. Thank you very much. Thank you very much. Thank you very much. I can see great. Thank you very much. Sasa kama mmeshika, hebu niwaulizeni, kama ungepatiwa hapa makapu, ungepatiwa makapu 3 over 8. Margin ingekuwa nini? Margin ingekuwa nini? Thank you very much. Wewe Mwang'ombe bwana. Mwang'ombe ameadd 1 hapa. Wewe angalia, unachukua 3 over 8 plus 3 tena. Plus 3, inakuwa 3 over 11. Thank you very much. Now, ladies and gentlemen, let's get back here. Tumesema for the unrealized profits, ladies and gentlemen, for the unrealized profits, what do? We are taking our profit margin, which is 40 over 140, times the remaining intra-sales. Remember, the total internal sales was 8,000. But remember, at the end of the day, pia walifanya kabidi, lazima waliuza. Hawakutoka bure, hiyo kampuni receive, hawakutoka bure. So, ladies and gentlemen, what do we have here? We are told Pedantic had sold 5,200 worth of these goods. 5,200. So in this case here, the remaining intra-sales, itakuwa ni 8,000 minus 5,200. Hebu nisaidie hiyo UPS inakuja ngapi somebody? UPS inakuja ngapi? Utashika sana. And this is the approach, ladies and gentlemen, ukikamata 800. We're going to name 800. We're going to name 800. Now, ladies and gentlemen, listen to me very well. Once I get these unrealized profits on stock, they'll affect 2 areas. They'll affect the cost of sales. And the inventory in the balance sheet. Because remember, IAS2 tells us that stock should never be kept at a profit. Stock can only be kept in our stores at a cost. But now we have a situation where one of our group members have their stocks having a profit in them, a profit of 800. So then we shall cancel this UPS from the cost of sales and from the inventory in the balance sheet. So in the inventory, you subtract. Cost of sales, you add. So come to the cost of sales here and do what here, somebody? Kama ningekuwa wewe, ningemake, ladies and gentlemen, ningemake inakuwa ni wimbo. But that is make pale ni wimbo. Unaona? Kwamba anytime I see any figure of UPS, I'll add it to cost of sales, and I subtract it from the statement of financial position inventory. Ningetaka sana kuexplainia mambo ya ati uki overstate profit, automatically your cost of sales in the stocks. Ningetaka lakini it make sense easy. Size the very best. Tumesema aje? UPS add to cost of sales, subtract from inventory. Tumeelewana namna hiyo kweli? Can I go to something different? Can I go to something different? Yeah. I hope umeandika kitu kimother tongue. Mimi nataka wanafunzi wanaandika kimother tongue. Now, ladies and gentlemen, the next thing, hiyo nimeshamaliza na mambo ya stocks ure. I wish my board iwe natoshea balance sheet. Ningepeleka upiga pale naandika pale minus kwa inventory. Lakini saa yangu haitoshei. No problem. No problem. No problem. So, ladies and gentlemen, the next thing I'll think about ni any revaluations. Remember, ladies and gentlemen, whenever you are acquiring a subsidiary, you must call in a valuer. You must call in a valuer. So in this case here, we did, yes, call a valuer or wrap the income statement. We called in this case, ladies and gentlemen, we called in a valuer. We called in a valuer. Look at note number 1. At the date of acquisition, the fair values of sophistic assets were equal to their carrying amounts, with the exception of an item of plant, which had a fair value of 2,000 in excess of its carrying amount. It had a remaining life of 5 years at the date of acquisition, like that. Ladies and gentlemen, listen and listen to me very well. When I will go to my statement of financial position, hapa kwa non-current assets, hapa kwa PPE, nitachukua 40,600 ya pedantic, nitachukua 12,600 ya sophistic, na pia nita add that 2,000, which was a revaluation upwards, what we call a fair value adjustment, which of course has already been factored in here, right? But interestingly, I have to calculate the depreciation on revaluation. So I have to calculate at this juncture, I have to calculate depreciation on what year? Revaluation. So I have to calculate depreciation on revaluation. Depreciation on revaluation, what nowadays in the new IFRS we call fair value adjustment. What we call fair value adjustment. What we call fair value adjustment. There's a student who is saying, mwalimu kumbe unajua consolidation hivi. The kind of consolidation which I know, ladies and gentlemen, I'm so sure in Kenya watu wachache sana wanaweza kujua hiyo. Because currently I'm the one who is doing group consolidation for EABL, for Equity Bank, right? Yeah. So hata kama kakona mna gani, kakuna subsidiary which is in foreign whatever, through a system called in this case here what year? Yeah. We shall overcome. Sasa nisikizeni vizuri. So this revaluation mnasema ni 2,000. Na mmesema remaining useful life ni miaka ngapi? Remaining useful life ni miaka ngapi? Yeah. Remaining useful life at 10 years. Uongo. Wamesema remaining useful life na hiyo sababu unajua imeisha tayari. Remaining useful life wamesema ni 5 years. Remaining useful life ni 5 years. Kwa hivyo unakuja na divide hapa na 5. Haya, niambie inakuja ngapi somebody 2,000 divided by 5? Inakuja 400. And this 400 is per annum, is for a whole year. Si ni kweli? And remember, this asset belongs to who? A subsidiary that was only ours for how many months? 6 months. So this has to be prorated. So nasema times 6/12. Times 6/12. Itakuja ngapi somebody? Itakuja 200. So this 200, what do I do with it? This 200, what do I do with it? In my mother tongue. In my mother tongue. What do I do with this 200? Usiniambie tuchora T accounts. T account inisumbua. Add it to cost of sales, yes. Because it's an item of plant. It's an item of plant. So an item of plant for production, utakuja na add hapa kwa cost of sales. Kama ingekuwa ni distribution van, ambayo ilikuwa na hiyo fair value adjustment, ungekuja hapa kwa distribution cost tuseme plus 200. Alafu kumbe mnajua hii method sasa utaenda kwa pale kwa PPE utalesa ka 200. Utalesa ka aka utanifanyia peke yako baadaye. Mimi karibu 10 minutes yangu ishe. Haya, kutoka hapo sasa I know the only thing that can affect my income statement is impairment of goodwill. Impairment of goodwill, not unless I have time. Those are some of the workings I'll tell the examiner to go and do for themselves, wherever they will be marking. Yeah. Yaani mimi nikifika sasa tu hapa nimeshamaliza. Nitakuja hapa mbio mbio, sasa nichukue calculator yangu sasa. Nisipate hiyo, uoye nipate hiyo. Hebu saidieni mwalimu sasa hizo figures za haraka haraka. Saidia mwalimu hizo figures za haraka haraka. Because if there are students here who have ever done AFR, watabear witness with me that kitu ambacho inawasumbua sana kwa exam ni time management. Unapata mwanafunzi akapo goodwill. Kwanza kuna ingine wanafunzi wengi wanajua kwangi pia mwanafunzi pia mko na shida. Nyinyi si kama sisi, wakati wetu sisi tulikuwa tunajua masiri mingi sana. Umeona for example like group retained earnings. Ile account ya group retained earnings, kama ni mwanafunzi mlikuwa mwerevu zaidi, you should never calculate group retained earnings, never. That's a very big working. What you do kenda pale kwa balance sheet, hii inakuwa ni balancing figure. Weka hapo ndani. Akimark that, anafikiri ulipa kumbuka bani. If you must do it that one, that figure. But for me, and remember me, I got 6 awards. In KASNEB, I got 6 awards. Those are the kind of things that I was not doing at all. Because at the end of the day, what I look at is basically to keep the wheel rolling and ensure that I pass, or rather get those marks that somebody who is above average will get. Nikipata time tarudi baadaye kumringia. Lakini AFR tutapata time kweli? AFR upata time ya kufanya swali moja 1 hour 30 minutes. Utaanguka hiyo paper mbaya sana. Utajibu theory nyingine yote. Hiyo paper ni international disaster. Hebu nipateni hizi figures haraka haraka. Aki amnipatie figure. Mnasikia story yangu tu. Nyinyi mnasikia story yangu tu oye. Cash flow is the easiest of them all. Cash flow. Ay. Cash flow is the easiest. Cash flow is the easiest. So this is question number 29. Maybe sasa nyinyi tutakesha na nyinyi. Kama mnajua cash flow bado, maybe sasa tukesha na nyinyi mpaka asubuhi. Maybe tukesha na nyinyi mpaka asubuhi. Shida, spouses wenu wata understand kweli, watajua unasoma ama utaambia nini madamu wako na watoto, utawaambia nini? Hapo utawaambia unawatafutia. So ukiona kuna answer, unapo wamesema revenue 98,000. Revenue is 98,000. Revenue is 98,000. How about cost of sale? Cost of sale wamesema ni 72,000. Ukisubtract according to ACCA, I like ACCA, inakuja 26,000. Kwanza tuone kama nyinyi mmefika hapo kwanza. Tuone kama nyinyi mlifika hapo kwanza. Ndio tujue vile tutakesha. Tuone kama mmefika hapo kwanza. Mlipata kweli? Mlipata cost of sales kweli? Cost of sales mlipata ngapi nyinyi hizi ukiandika? Ama nilivuta haraka. Cost of sales. Koecha anasema gross profit should be 26,000. Walisipata 72,000. Gross profit should be higher. Alafu najua uzuri wa hii method. Kama usha realize, kuna very many items that don't need adjustment. Mona, hata angalia maswali mmefanya kwa Njuguna. Kuna so many of them ambayo do not need any adjustment. Don't need any adjustment. Don't need any. Ona kama sasa ni max ya free. Hata kama ningekosea hizo huku juu kama cost of sale na kuna DM inasumbua wanafunzi, lakini je hii 2,000 plus 2,000 times 6/12 inakuja ngapi? Akimnataka tukesha na nyinyi na hamtaki kunipatia figures. So wameniambia hapa ni 3,000. Hapa je administrative expenses inakuja ngapi somebody? Administrative expenses inakuja ngapi somebody? 7,600. Administrative expenses 7,600. Then we have finance cost ya ngapi? Finance cost ya ngapi? Finance cost ya 500. Thank you very much. Then, ladies and gentlemen, of course, when I subtract all this, you subtract them, then you should be able to give us the profit before taxation. So 26,000 minus all that. 26,000 minus all that. 26,000 minus all that. 14,900. Aya, abracadabra. Nipatie sasa hapa income tax expense inakuja ngapi? Income tax expense shigana. Income tax expense 9500. 5400. So please now subtract this for you to be able to give us the profit after what year? The profit after taxation. Subtract for you to give us the profit after taxation. Ambao wamesema inakuja 9500. Sasa utapata mwanafunzi mwenye ajui AFR ataanza kugawa ati what is attributable to the parent, what is attributable to haya. Unasema Ruben anasema ni 4900. Ruben amepata 4900. Alipata 4900 wapi? Tax. Tax wanasema tax ni 4900. Is that true? Tax ni 4900 kweli? Tax. It is 4700 plus 700. Hiyo iko sawa. Ruben amekubali iko sawa. Thank you very much. Hata kusema ukweli ndio huyo hapa. Ruben wewe kocha ni mchokozi. Kocha anakuambia Ruben wewe unalala bwana. Sasa unaona hapa, unaona hivi. Siko hapo. So ukija hapa kwa property plant and equipment wamechukua ile 4600 plus 12600 plus 1800. 1800 wametoa wapi? Walichukua ile 2000 minus ile 200 yetu. Right. So ladies and gentlemen, that is it. So unakuja pia ukienda pale kwa balance sheet, technicality ya balance sheet itakuwa wapi sasa? Itakuwa pale pa mambo ya internal owings. Internal owings unaenda kwa receivable unangoa, unaenda kwa payable unangoa, namna hiyo. So that is it. And ladies and gentlemen, ningetaka kuendelea but I'm too much exhausted. Ningetaka pia mpate time ya kurevise peke yenu. Mimi kutoka 5 nimekuwa nikifanya class continuously mpaka saa hizi. Hata najaribu kuweka macho steady, naona hapana. So I want to believe at least tumepata ka concept. At least tumepata ka concept ambako katasaidia sisi. No, then the very best you could do, to be fair to me, group tuko sawa sasa. to be very fair to me, the very best we can do, ladies and gentlemen, ni kuensure kwamba niwapatie class moja free of charge, hata kama ni asubuhi saa 10 ama ni asubuhi saa ngapi. Sitaki kuanguka chini. Kuna vile masomo mengi. Hebu to discuss tuone wanasema aje. Hiyo 5 So wengi tuko sawa sasa, maybe good. I will market you here in Baringo. Wow, great. Free itakuwa free of charge. Ya kesho itakuwa free of charge. Lakini sio 4, wacha nilale masaa yangu vizuri, italala masaa yangu 6, 5 am, na nitakuja na shortcut gani? Shortcut ya group cash flow. So 5 am cash flow. Now ladies and gentlemen, hata 1 hour ni sawa. Ladies and gentlemen, the other thing ambayo wanafunzi wengi wanalialia, you see like now today tuko very much happy because the chairman of ISPAC that I was really supporting, candidate I was supporting for chairman of ISPAC, amepatiwa kiti. Yeah. Mimi nilimwambia vie for this thing, amepatiwa, tumemkampenia sana. So wananiweka mwalimu hapa kwa committee, ISPAC committee, member services in charge of what year? Education. It's a role that I'll really be able to take with a lot of honor, because I know accountants wengi hapa don't over admit. Yeah. Sasa hiyo pia ni makosa, hiyo ni makosa, perhaps you are greedy. Hiyo ni makosa kwetu, tumechukua pesa more than 100 to